Will this trend continue in the second half? Our next guest unveiling two new ETFs that he's launching tomorrow, focusing on large cap growth and large cap value. Joining us now is Crossmark Global Investments CEO and CIO, Bob Dahl. Bob, it's great to have you on. And let's start right there. What do we need to know about these ETFs and what differentiates them from what's already in the market?
Yes, Morgan, but we think what differentiates them is they're active in management. Most of the launches have been passive, and ours are values-based. I don't think I get out of a meeting without some financial advisor saying, hey, when are you going to have ETFs? So we're excited to launch these tomorrow. As you point out, it's going to be a large cap growth and a large cap value, both actively managed.
Now, we've talked about this divergence, this outperformance of growth versus value in the first half of the year. Today, specifically, if you look at the market, there was a rotation from growth to value. How do you see this playing out in the second half?
Yeah, I think it's going to be back and forth, gun to my head. I think value beats growth for the second half of the year, largely because the largest sector within value, which is financials, we think will outperform technology, which is the largest sector within the growth spectrum. But I want both in the portfolio. On the value side, I just want to be careful, not just to buy cheap stocks. There's got to be something going on, some sort of catalyst. And I want to own growth stocks. I'm just going to be very picky about the valuation because valuations are high.
So when you talk about growth catalysts and avoiding value traps, if you will, what are those catalysts? What are the types of things that you're looking for?
Free cash flow, rising free cash flow, inexpensive price to free cash flow. And then on profitability, we want high and preferably rising return on equity. And you put that combination together, low price to free cash flow, high return on equity. Doesn't guarantee that you're going to outperform, but it does provide some wind to your back, Morgan.
I want to go back to something you said before, which is interesting to me. You said values, not to be confused with the growth versus value, but values. How do you define values? How does that drive your investment thesis?
Certainly. It's both what we give an extra kiss to and what we won't own. We won't own companies that make products that maim or kill people. Cigarettes are an example. And we want to give extra credit, if you will, to companies that are doing good, how they treat their employees, their customers, their suppliers, their community, and those things are very measurable.
Interesting. So if I take a step back, how does all of this reflect your view on the market right now, especially as we have the S&P trading at a record high?
Well, while fully invested, Morgan, I'm on the cautious side. Look, the economy is good but not great, and we think slowing. Job growth acceptable but slowing also. Inflation sticky. The housing market, because of high mortgage rates and high prices, pretty difficult. The AI tailwind is for real, both for the users and the suppliers, but the stock market reflects that, selling at 24 times earnings. That's the high end of valuation territory, so we want to be really careful what we own.
What do you think of the bond market right now, and what do you think it's signaling?
Look, I think it's in a trading range, and of course, as Rick just reported, we've seen now the lower end of yields. I think we will oscillate back and forth. The bond market's going to watch the Fed carefully, and the Fed's sitting on their hands because they don't know enough about the future to do a whole lot. Maybe a cut this year, maybe not.